Joining me right now is the chairman and CEO and president of Principal Financial, Dan Houston. Dan, it's great to see you this morning.
Good to see you, Maria.
Thank you so much for joining us.
Thanks for having me.
First, a word on the volatility and really what it's reflecting, because we were just talking during the commercial break. The broad economic story is pretty good.
It's very solid. As a matter of fact, if you look across a lot of the metrics, an economy that can grow at 3% and maintain that is quite healthy. There's more clarity on tax policy. Regulations have been rolled back. And if you talk to small to medium-sized businesses, they feel pretty darn optimistic about the future.
And do you think that was largely because of the tax cut plan, the regulatory rollback? What is driving this better tone?
I think a lot of it has to do with certainty, whereas before it was uncertain about what the tax policies were, what I could deduct, what I couldn't deduct, uncertainty about regulation, would it change, and the fact that we've rolled back some of that regulation has probably created a business environment with more certainty about where I can make investments as a small business owner.
Do you worry, Dan, that the Democrats have now taken the majority in the House, that maybe we could see them try to stop or slow down the president's business-friendly agenda, including things like the rollback in regs and lower taxes?
I think historically you look at divided government, and there's actually a degree of paralysis.
So it's a good thing?
Well, I don't know. You know, it all depends. At the end of the day, we seem to have found a good balance between regulation, tax policy. I think trade is an area that's creating some uncertainty today. So hopefully what the divided Congress can do is get around to getting a better trade policy in place so we can get back to business on a global basis.
So, but from your insurance business, I mean, the business climate, you say, is strong.
It's strong, yeah. I mean, you look at the number of new people coming into the workforce. We're one of the largest 401k plan providers. We're seeing that in-plan growth measured by participants. People are deferring more. They're contributing more to their 401k plan. They're saving. And in spite of all of this market volatility, people have a tendency in qualified plans to leave their money for the next 30 years. And again, that's a large, stable source of capital for this country.
The 401k has been so critical in terms of creating wealth for a person over the long term. I mean, it really is.
It's enormous.
It's enormous. So tell us what people miss in terms of retirement, because even with the 401k and your company match, people don't have enough money in retirement to save for retirement.
It's three things. The first thing is they just don't save enough. They have a tendency to want to save as much as the match is. So 50% match up to 6. They put in 6. The company now is putting in an additional 3. That's 9. That's still short of what you need. Here's a good rule of thumb for all your listeners. You've got to save over the course of a working career, 35-year working career, save 15% of your income, and you'll replace 85% of your income at retirement. So if you retired 35 years from today, making $100,000, you'd have enough money to provide $85,000 a year in monthly or annual income.
Wow.
That's the sort of degree. So that's number one.
So save 15% of your annual income.
Today.
Okay, good. I got that.
And replace 85% of the future. Secondly, we still have people who are not participating. They're eligible for workplace savings programs, but for whatever reason, they're not getting enrolled. And that's some of the legislation that has been very helpful, because this auto-enroll, auto-elect, auto-escalation for these deferrals allows employers to go ahead and enroll you and increase your contribution up to some maximum, which is typically about 10%. And then the third is these target date funds.
Yeah, target.
You know, you're dealing every day with market volatilities in the equity markets and fixed income and foreign. But most people, 35 to 45% of 401k savers today, choose some sort of lower cost target date fund. It may or may not be risk adjusted. Individuals who are in those sorts of strategies tend not to try to get too upset about the market volatility. Yeah, they're dollar cost averaging in.
I love these ideas, because this really resonates with our audience. Before you go, let me ask you, Dan, in terms of the fees, in terms of the regulatory environment right now, what are you going to do about this race to the bottom in terms of fees?
Yeah. Well, a couple of things. You know, fees are coming down both in active and passive strategies. Most plans make the choice of having a combination of both, and we offer all of the above, right, in terms of passive and active strategies. But I think, again, as you look at the sheer size of this market and the growth of the assets, the strong players like Principal will continue to thrive in this marketplace.
All right, we'll leave it there. It's great to see you, Dan.
Good to see you
Thank
again.
you so much for joining us. Dan Houston joining us as the CEO and president at Principal Financial.